Hi everyone, thanks for joining my channel. Today we want to discuss about the range breakout strategy that can be used in your day trading or forex trading as you might wish. So let's go through the context and background. So first of all, we obviously want to discuss on what is trading range. Trading range is basically a period when price moves sideways between clear support and resistance level. Many people, call it consolidation. Some people call it accumulation distribution, but it's all same. Basically, price is stuck between clear support and resistance levels or between two levels. Yeah. Why trading range happen? So mainly, first of all, you don't need to know why it happens, but yeah, it's good to know. Why I say that you don't need to know. I mean, any pattern or any price action, why it happened, you don't need to know to trade that price action profitably. Yeah, you just need to know how to trade it. Where is the probability? So mainly it happens when market participants are undecided. Buyers and sellers, they are balanced. They both are happy to do business on that area. Yeah. And many times big players, they consolidate their position in that level or in that consolidation area. Why breakout matters? I mean, when price finally breaks above the resistance or below support, it signals a strong move, and many times you will get a decent, good size move upwards or downwards, depends on the breakout here. So that could give you very good profit. Breakout often comes with higher volume. That probably you can treat confirming momentum. This is not mandatory step, but yeah, you can use that as well. And ranges often precede major trend. The longer the range, the longer the range, the stronger the breakout could be. Because obviously, if you imagine a range of, let's say, 2-3 hours in a day trading, which definitely has more potentially more upside or downside move than a range of, let's say, 30 minutes. Yeah. So that's about the context and background. Let's go to the next slide. So this is how the trading range looks like. So easily you can see the price came down here. Yeah, price came down, price went up, came down again, went up, down again, up. So this is a trading range. You can, at this point, you can see this is a trading range. And price and just consolidating between these two levels. This upper level, this is the lower level. The range continues. Yeah. So that's how the trading range looks like. The typical trading range looks like. Yeah. So now we see how we want to trade it. Yeah. Trading range, as we discussed, market moves sideways, stuck between support and resistance. We already discussed that more bars or more time, stronger setup. So for example, this one. See how many bars there, maybe more than 30-40 bars. So it's a good, if you imagine these are 5 minutes bar on a day trading, Yeah, anything more than 30-40 bars, these are really strong setup. And same for, let's say, if just imagine if this is a forex chart and these are daily bars. Yeah, you can apply the same rule. So anything more than 20, 30, 40 bars, that means 20, 30, 40 days of price action. These are typically strong range. If it breaks out up or down, it could give you, when I say strong range, that means if it breaks out up or down, sorry, so it could give you decent move, upside or downside. Yeah. So we have covered this point, breakout bar. So that is the first bar which breaks out, outside of the range. And then you need to look for the follow-through bar. Again, it is not mandatory to look for follow-through bar, but if you get a follow-through bar, your probability is more for a successful breakout. If you don't get it, your probability is low. Yeah. And always remember, it's not only about how you enter, it's also about how you manage your trades after you enter. So for example, if you get a breakout bar, that we'll discuss in the next few slides where I have captured a couple of examples. So when you get a breakout bar, if you get a follow-through bar, so that's where your probability is high, yeah, for a successful breakout towards continuing that direction, the same direction the breakout bar has happened. What to look for? Both breakout bar and follow-through should have good size, good body size. This is very important. This signifies a strong breakout, yeah, not just tiny small candles that we are looking for. And it should have a clear breakout above the range, above or below the range, yeah. Ideally, if you get these bars, which is actually breaking out, closing on its high, that's good, or closing on its low for the where it's breaking out downward, it's good for the breakout, yeah. Now let's talk about some of the examples. The next slides. Yeah, so here if you see, this is a clear range. I mean, you shouldn't find it difficult to identify the range, identify this range. If you see, price went down here, up, again little bit down, consolidating. This is a tight trading range here. Up here, little bit, came down sharply on towards this low. Yeah, hopefully you can see this. So came down here, right? So it came down here. See, you can see this low. I don't know why this painting not working here. So it came down, this swing down, came here on this low. So it's a clearly trading range here. And then this range continues here. And then finally it has broken here on this bar. It's broken. And immediately you got a follow-through bar. And this break, I want to highlight that this breakout bar, it should be clear break. It's not like something like this maybe. I don't know if this bar has broken out. I don't think so. But let's say this black bar, yeah, this red bar. So this tiny breakout kind of you need to ignore. You should have this clear breakout. And you see the bar closing on its high, good size body. So these are bull trend bar. Immediately you got follow through. So now you have multiple choice how to enter here. So either you enter here, closing of follow through bar, or you can enter anywhere here. Yeah. Anywhere in this breakout area you can enter. Your stop loss should go here below. You shouldn't put a stop loss here. You can put a stop loss here below the breakout bar. So either way, I mean, if you put the stop loss below the breakout bar or below this whole range, you need to manage your risk accordingly. Both are same. Both will give you similar results after 100, 500, 1,000 trades. It should give you similar results, yeah. So, but the entry should be like this, you get the breakout bar, you get the follow-through bar, and then you enter. Ideally, you should have entered here. Sometime you might not get any pullback, which you got here, yeah. So you can enter after the follow-through bar, and you catch this trend. It's a good upside if you see how many times profit you could make if you capture this, yeah. So this is one example. Let's go to the next one. Here. So if you see here, the range is a little bit bigger, yeah, than the previous one. You see, this range is tighter range. This is a little bit wide, yeah, but similar thing. I mean, same thing happened. So I have marked this orange line to show the upper resistance level of this range. You get a breakout, yeah, on this bar. See, hopefully you can see my cursor. So you get a breakout. Immediately you get a follow-through. Follow-through bar is not that good, but still it's a follow-through. Yeah, so you can enter anywhere. You can enter on the breakout bar, so you get a good entry. Yeah, or you can enter at the top of follow-through bar. Anywhere here you can enter. Your stop loss either can go below the breakout bar or below the range or below here. Everything should give you similar results if you manage your risk correctly. Yeah. So when you enter, then you need to wait for this swing trade to play out. Yeah, you need to wait. See, you get a good swing. So this kind of setup, this kind of range setup, typically I have seen gives very good return and very good risk to reward ratio and very good probability. It's a very reliable setup that you can use. In trading, most of the time, I guess, if you use high probability setup, which will give you more than 50-60% win rate, better. It's very difficult to trade a system which gives maybe 30% win rate. Psychologically, it's very difficult until you know, unless you know what you exactly are trying to do. Yeah. So coming back to this setup, again, this is the higher resistance level. It's broken out, breakout bar. Always look for breakout bar. This is not a breakout bar. If you see this one, this bar where my cursor is, right? Yeah, yeah. Let me see if I can take some shape or something. Or maybe not, I can't. Maybe this triangle. Yeah, something like this, yeah. So this bar, this is not a breakout bar, you see. Clearly it's not broken. That's why I draw this orange line to explain this situation. So sometimes it could be confusing. Is this a breakout? This is not a breakout bar because it didn't break out completely out of the range, yeah. So this is a breakout bar. This is the follow-through bar. Price pulled back a little bit. And this is a very good follow-through bar now. You can use this as a follow-through as well. And then you enter. And you catch this trend. Yeah. Okay. Let's move to the next one. Example 3. Again, now this is, if you see, this is a downward breakout. So you can draw these lines how I have drawn, or you can draw these lines something like this. Doesn't matter here. Okay. You will slowly, if you practice, you will see these levels. It doesn't matter how you want to draw, as long as it has multiple touches and the range is big, you are good. Yeah. So then you can see the clear breakout bar here. Again, you need to look for the breakout bar. So this is the breakout bar here. Follow through bar, not a good follow through, but still a follow through bar. You enter, it went down. Somehow I couldn't capture the snapshot here. My apologies. But you enter this. If you see this bar, I want to make another point here. This breakout bar, if you see this candle, more than 50% of its size is outside of the range. That signifies a clear breakout. The bar itself has a full bullish body, which is kind of maybe 90% plus closed on its low, right? If I consider the whole size of this candle 100%, probably the close is more than 80-90% level. Sometime you might get confused that is this a breakout bar? This one, this red bar, this black bar. You see, the bar itself, it didn't close, right? It didn't close below the range. The body is small, right? The body is small, didn't get any follow through bar, nothing has happened. So if you just add or just remember a few things that, the bar should close below the range, should have a good bull or bear body in this case, right? More than 50% of its size is outside of the range. Yeah. Closing on its low, almost. More than at least 80-90% more than that. And then you have a follow through bar. These are very reliable setup then. You put your stop loss here, or you put your stop loss here. All same. If you manage your trade correctly, both situation, whether you put your stop loss here or here, will give you similar results after 100 or 500 or 1000 trades. Yeah. And you catch this move then. Yeah. You don't get out immediately. These are swing trades. Don't try to get out immediately after one or two candle. Try to hold this for 10-20 bars. That will give you good risk to reward ratio. Hope it makes sense. Let's move to the next one. So key takeaways. So always remember, successful breakout needs follow through bar, or follow through. The larger the range is better. So always look for a range which has more candles in it. And many times the range might not look exactly rectangular shape. It might have little bit up and down spike. But as long as it looks reasonably clear, that's good enough. You might not get always picture perfect trade. But as long as the range have multiple touches and many bars within that range, and the other characteristics that we have discussed in previous slides, you should be able to take that trade. And so that's it for today. Thanks everyone. Thanks for joining, and thanks for listening. Yeah. Have a good day and have a good trading. Thank you.